but I really thought it was pretty important to talk a little bit about what's going on in the market right now. And I know we are potentially rolling back and heading back into kind of, phase one of COVID. But I wanted to talk about lending. And I really wanted to talk about if you're a buyer, I mean, if you're a seller, obviously you want to know who's available and are lenders lending. But what we're seeing right now is, low inventory and low interest rates are absolutely causing multiple offers on most properties that especially under $1 million. And so I thought I'd bring on Mitzi Fierro. So welcome, Mitzi. And she's
Thank
with
you.
Inspiro Financial. And, she's just a wealth of information and knowledge and doing, quite a few loans and very active and really helping us position our buyers to be able to win the home. So, Mitzi, welcome, and thank you for jumping on with us so spontaneously on Tuesday afternoon. But lending is super important, so thank you and welcome.
Well, thank you. No, the lending market is really hot right now. It's just been amazing. The rates are the most historically low we've seen them ever. Conforming loans are, with good credit and just a marginal down payment are in the high twos, low threes. High balance conforming is in the same area. We are seeing a lot of people still able to get loans. You're a W-2 employee, you're still able to get a loan. It's going through rather seamlessly. If you're self-employed, you have a self-employed borrower. We're still lending. We're not giving anybody any haircuts on their income, but what's happening is we're supplying a profit and loss statement to illustrate that there is continued employment and continued income. But it is a hot market. And one of the things I'm going to tell you guys is one of the ways I'm seeing my clients winning their offers and multiple offers is by getting shortened contingency release dates and shortened escrow. That's been huge. I've had quite a few clients. We've been really aggressive on it, and we've won those deals by saying, hey, we have a loan contingency out in 10 days, a contingency done by 10 days, and we're promising a 25-day close. We really want to make sure that everybody's really prepared so we can make sure we meet those deadlines. But those are one of the ways. And I noticed that the people who really are winning a lot of these offers are setting that up front prior to the submission of the offer. So that's what people are expecting, and they're really getting them, and we're getting them pushed through. So that's a really nice thing. One of the things I want to tell you guys about jumbos is because of the resurgence of COVID, the 10% and 15% down jumbo limits have been moved back on the aggressive product. They've been moved to 900,000 and $1 million, respectively. 900, 10% down, and $1 million for the 15% down. There is, if you need that 10% down product, there is one left that goes up to $2 million. It is not aggressively priced at all, and it's a real push to get through. They're going to have a 30-day escrow, but it is available, and they know they're the only game in town, so it's priced accordingly. But we are getting those pushed through, and it's still a product that's available. In terms of the jumbos, 20% down, still live with our big bank lenders, and a few of the banks have gone to 30% down, and they're offering some aggressive pricing with that. So if you have that kind of in the box jumbo borrower, there's still a very good pricing out to them, also in the high twos, low threes. So those are the
they're just giving you money. I mean, to get interest rates today, even at low 3%, that's what's causing this market to just be on fire. Because if you're looking at rent, if you're paying rent, or you're wanting to move up, or you bought a couple years ago and you're sitting in the fours, and you can buy a bigger home and lower your interest rate, we're seeing like your payments staying the same. And so we're seeing a lot of people wanting to move up. COVID is having people really reevaluate where they're living. And, we're really seeing just the cost of money is they're just the government is basically saying, the banks are basically saying, borrow money from us and it's so cheap, which is what we're seeing. Again, you need to qualify, but it's totally feasible, and that's what's making this market go as crazy as it is. It's the low interest rates over and over and over and over and over again. Is we're seeing low interest rates. I think one of the things that I want to point out is, when we list a home, we talk a lot about the preparation of listing a home and taking the time up front to make sure that the home shows well and it's clean. What we're talking now with our buyers is really taking the time to talk to you or their preferred lender and doing the homework up front, so you can really understand, go through underwriting as far as you possibly can, so that you can shorten the loan contingency window.
Right.
So what would a buyer need to do to be able to do something like that in today's market? How long does that take? What do they need to provide?
Well, typically, and we're talking, your average borrower typically will need 2 years W-2s. And one of the nice things that they're doing right now on all Fannie and Freddie loans is, if you're a W-2 borrower, we can get away without the tax returns. So they're doing pretty much W-2s only, the last 2 paycheck stubs, and their funds to close. If we have that and we've run their credit, and we do our automated underwriting system, they're really good to go. I mean, that, as long as we have that information, we know ahead of time that loan's going through. When you have a self-employed borrower, typically what we'll do is we'll send it, and well, let me go back to the first equation. On a W-2, we're going to know within 30 to 45 minutes if they're able to be qualified and they're able to move forward. Those really plain vanilla, straight in the box W-2 employees, those are going through and they're singing through. Self-employed borrowers, we're a little more careful. Typically, I like to send it to our underwriter to look at the income and say, are you good with this? Because we want it to go through. I don't know.
Important.
What's that?
Super important to know up front.
No, absolutely. So, we take a look at it. Sometimes it's just completing the income worksheets for her, sending them over and saying, hey, please run through these, because we know, at this point, literally, we know what's going to go through and what's not. And if there's something that's really funky looking, we will send it to the underwriter ahead of time. It'll take us maybe 24 hours. But if it's something we're really nervous about, it's worth the 24 hours to have them look at it and say, oh, yes, this will work. I'm good with this. It's underwritten, and fortunately, we have a good enough relationship that we can talk to our underwriter and say, hey, I'm worried. Please underwrite this loan before they go into escrow so we know what's going on. So, if you get that, and there's a difference. I see the banner that's getting pre-approved is key for multiple offers. Let me talk really quickly about the difference between pre-approved and pre-qualified. So a pre-approval, we actually go through, we run it through an underwriting system. We will talk to our underwriter, go over it really quickly. We have separate underwriters who will look at stuff for us. And you really want that pre-approval as opposed to a pre-qualification. When somebody's if you get something that says, hey, your borrower's been pre-qualified, typically it's a loan officer looking at it, doing some rudimentary calculations, looking at their credit report and going, yeah, okay, this will work. Everything looks pretty good. I think this will work. So there's a huge difference between pre-approval and pre-qualification. And I'm always pushing people, make sure you get completely pre-approved. There's a big difference. Make sure your letter says pre-approval. Even if you look at a letter that you've received from me, it will say subject to underwriter final approval. But the only thing that really pertains to is, making sure we've done the fraud alerts at the very end. These are just like kind of very typical final steps that people do. I think like 99.999% of the time, no weird fraud thing shows up. I think in 15 years, I've had it happen once. But, you only have to get stung once to be really, very careful. So, you really want to make sure that your buyers are literally pre-approved as opposed to pre-qualified. There is a significant difference. There's a significant difference in the way people approach it. So that's just another.
So what I agree with you, because I think when we get offers and I see pre-qualified and I see that
Yeah.
they've have they really reviewed W-2s and their credit report, and have they really gotten documentation, or is it all verbal what the buyer told me? I mean, there's a big difference in the way people get
Oh, yeah.
pre-approval letters. So let me ask you a question. You hear it a lot. I don't want you to run my credit. This lender already ran my credit. I don't want to run my credit again. And you hear that a lot. And what's your response to a buyer who, we want them to, we just had a deal fall apart because the lender, was not qualified. And, and unfortunately, it was a lot of work for everybody. And they did not want to run their pre-approval, they did not want to run their credit. So tell me what the right answer is to that.
Well, I will not give them a pre-approval, and what I'll ask them to do is I'll say, okay, well then you have your lender send me your full credit report, and I will manually input everything to see if it works in my system. Interestingly enough, I had a client who did that and said, don't run my credit, and then came to me and said, oh my gosh, I have this pricing, can you beat it? I said, okay, well, send me your credit report. I kind of looked through the whole thing. And then they ended up going with me, and I reran their credit, and their credit came up like 75 points higher than it was a Wells deal. Came in 75 points higher than Wells Fargo, and their pricing went from, like, at the time when pricing was higher, 4.625 to 3.75, and I'm like, see? But you can calculate it. If they're super adamant, I really prefer to run it. Not all credit companies are created equal. But if they are adamant about it, what I will do is I'll manually input it. So I have everything. And Allie and I have both spent a lot of time with underwriters and asking them, over the years, like, well, how do you read credit reports? What specifically are you looking for? What's the first thing you look at? And we try to find all those little nuances, because I'm sure all of you have seen a credit report and they're just a jumble of numbers, and you look at it and you go, what?
But Mitzi, I have heard, and I don't know if that's true or not, if you're running it, like for the same thing within a period of time.
Yes, well, I was getting to that. So here's kind of the guideline. So having said that, I mean, like I said, if they're adamant, I'll manually input and pre-qualify them off of that. But I do tell them ultimately, listen, if they do it within about a 2-week period and it's only mortgage companies, they're not going to get a credit hit. Because
super important.
Yeah, because mortgage companies and credit companies expect you to shop for a mortgage. Nobody thinks you should just call one lender and go, oh, hey, you're the one for me. We don't like it, but reasonably they should shop. And I often tell people, yeah, you definitely should shop, because nobody's going to feel comfortable if they don't. They all want to feel that they're with the right person. They should interview a few people and ultimately reach the person that fits for them and gives them the best deal at the best price. So,
and it's not always the best deal, because an eighth of a point and confirming that you can really close a deal, is on a $500,000 loan, an eighth of a point is not a lot of money. And that is one of the things that I love to talk in closing, is sometimes our buyers, any buyer can get hung up a little over $10,000, $15,000, $20,000. And in this market, when the interest rate is 3.25% or under 3%, how much extra a month is it for a loan when you're going up? Is there a rule of thumb that you can look at to say an extra $10,000 is X amount of money?
At $500,000, it's about a $40 difference per eighth.
$500,000?
Yeah. At $500,000 per eighth of a rate, it's about $40.
Got it. So what if
you know,
I,
it's funny.
so I guess that, that's nothing. So my question is if
It all depends on the
how much,
person. I mean, there's a lot of ways that we sell it. And when I'm talking to secondary and we're trying to negotiate, like if we're out in the market and we're not priced really well, and I'm talking to secondary to say, hey, you know, we're out, we need to be more competitive. Right now, actually, we're super competitive, so I'm like super confident. But, you know, in the past, when the market's really volatile, you know, and rates change so constantly, it's hard to keep up. Our rule of thumb is we can always sell an eighth for service, truly. You can't sell a quarter, you can't sell 3/8, you can't sell a half, but you can sell an eighth. But one of the things, you know, we also talk to borrowers about, because not everybody is really in tune to closing costs. No matter how many times we talk to them about it, once they see that number, it's still surprising for them. So one of the things we talk about also when we're talking about pricing versus deal is if somebody has a $500,000 loan and they're getting 3% and they're getting a lender rebate of $3,500 and they are really lured in by that 2.875, but 2.875 is par, I'm telling them, listen, it's going to take you a long time to eat up that $3,500 at $40 a month. You know, it's worth it to take the eighth higher to get that $3,500 rebate and closing costs. So when I say the best deal at the best price, it's not necessarily the lowest rate. It's what's best for that borrower.
so
And
one last question is at an interest rate, because sometimes we tell a buyer, look, we want you to win the house, and sometimes going up $10,000 or $20,000 is, you know, how much more is it to go up in your monthly payment to go up $10,000 or $20,000 when these low interest rates are at 3%, 3 and an
it's
8.
pennies. It's pennies. It's
So
sometimes
is there a rule of thumb
it's $2 or $3, literally.
on a $20,000?
Yeah, over 30 years. It's very, very low.
So,
I would have to calculate it out at a rule of thumb off the top of my head, but it's just going to be a few dollars a month. It's not going to be significant at all.
so buyers, if you're out there and you're watching this and you're hearing what's going on in the market and you're thinking, A, can I get a loan? Yes. B, is it competitive out there? Absolutely.
Yeah.
What should you be doing? Call Mitzi, call another lender, make sure you go through the underwriting process, get as pre-approved as you possibly can. Shorten your approval process so that you can submit a very strong offer and, you know, shorten your contingency windows. Make sure that you're, you know, obviously make sure you're really, you know, in good partnership with your agent and your lender. Make sure your lender calls the listing agent to talk about the strength of your offer. And last, don't get caught up over here $10,000-$20,000 because it's a couple dollars a month and it makes you get the home. And we have a very competitive market. We have low inventory. Lending is a very important part of this whole process, as you can see, and working with the right team and the right people in place will help you win the home because it is a competitive market. And, you know, Mitzi, I have to run to my 4 o'clock, so
No, thank
I'm in
you.
the car ready to go. You are a knowledge and of, you know, information, and I know you're great with clients. You take your time. They can meet with you in person. They can meet with you, you know, on Zoom or over the phone,
Yeah.
however a buyer wants to. But certainly when you get a pre-approval letter from Mitzi or any, you know, lender that we recommend, we know they're going through all of this work. And, you know, we appreciate you. We appreciate you as a partner. We think you're, you know, we know you can help us help our buyers. And that's really what's so important.
Well, thank you. Thank you. No, we are loving working with all of your realtors, and every single one of them has just been so experienced and so wonderful. So it's great to have a partner who's willing to fight for their clients like your team is.
Wonderful. All right. That's a good Tuesday tip on that note. Have a great rest of the Tuesday, and we'll see everybody next week. Thanks so
Thank
much,
you.
Lindsay.
Bye.